Usually I have about a 52 something slide deck going through, all of the things that we look at and the fundamentals behind it. But at the moment, I'd like to kind of just whisk through some of those slides and spend most of my time today talking about things that you're interested in, talking about things that will be valuable to you right now, that you can go and apply tomorrow. And so if there are stocks or any kind of market conditions you'd like to review, I'm going to make a lot of time for that today. So obviously, because of that disclaimer, it is all for educational purposes only. And of course, any stocks we discuss is not a recommendation to buy or sell. All right. So the agenda, the shortened agenda, is to talk about basically what the market is. What do you need to know about the market to make money? I talked to a bloke on the phone the other day who has been doing training. He told me he'd spent something between $25,000 and $30,000 on software, courses, indicators, things like that, and still didn't know what he was doing. And I'm sure they're all good courses, but the problem is that you get so overwhelmed with so much information that sometimes it's important to come back to the simplicity of what is the market and to kind of just to get away from the noise. So we're going to talk about what the market really is and the simple things that make money easily. Well, not easily, but in a simple fashion. And we're going to talk about putting that into a strategy form and then showing you how we use that and what we're trading right now and currently holding right now as a result. So I find that, as Reed said, we've worked with thousands of people since we were founded in 2007. I've been involved in the markets now for 14 years. My first job was working at a movie store. My second job was a full-time trader. This is all I've done all my life for the last 14 years, and I love it. But I find that in the 14 years I've spoken to other traders, people struggling, struggling myself in the early days. There's a few key things that everyone seems to come back to, and that's wanting a proper strategy that works. Having a strategy and knowing, okay, if I sit down today in front of my computer, what steps do I actually have to go through clearly, black and white? What do I do first, second, third, fourth to determine which direction the market's going? What type of strategy is going to work best, and how do I find it? And once I find it, how do I know when to get in, when to get out, and where to put my stop, based on rules, not feelings. So for that, we need a clear-cut strategy. Then, of course, the second thing we need are scans. Once we know what we're looking for, how do we find it? Because you shouldn't be sitting there going through the entire S&P 500, because that's a waste of time. Nor should you just be simply sticking to your 5 favorite stocks, in my opinion, because there are obviously benefits to that. But when you're purely technically focused, I find that quite often some of my favorite stocks aren't in high probability setups. And if the stock isn't in one of my high probability setups, I don't want to trade it. And I was listening to the previous speaker make a valid point. He was talking about the fact that you don't want 15 strategies in the market. You want one that works. And the problem with trading your 5 favorite stocks is at any given point, given that there's 100 different technical patterns out there, what's the chances that one of your favorite stocks is going to be in one of those highest probability patterns? 1 in 100? 2 in 100? But that's the problem. So we need a scan to find where the highest probability patterns are, and it might be in a stock that you've never even heard of before. So we need strategy, then we need a scan to find it, and then we need simplicity. We need something that's 1, 2, 3, where we can basically start diffusing the idea of whether we're right and wrong, stop worrying about being right or wrong, and just simply worry, have we found a trade that meets the rules or not? And to do that, these are the 5 steps that we teach everyone to follow. First, the 5 steps to every trade is firstly research. We run our scans to find what trades meet the exact pattern we're looking for. Secondly, once we find the pattern that's the high probability pattern, for example, a flag formation, a cup and handle formation, those are 2 of the highest probabilities. Head and shoulders are fairly high ranking, just to give you a couple. Once we've got those patterns, now we know what the rules are for those patterns. So now we analyze and we apply the technicals. Once we've applied the technicals and we decide that, yes, this is a trade that could really make money, then we have to apply risk management. So let's say we're almost 100% certain that this thing is going to go from $10 to $11. But what if the support is all the way down at 9, right? So the stock's halfway rallied up already. Well, that means even if we're 99% sure it's going to go from 10 to 11, we'd have to put our stop loss under support, so under 9, which means we'd be risking $1 to make $1. So even though the trade looks great, it's not proper risk management. So no matter how confident we are we're going to make money, we don't break our risk rules. That's because that's what protects our capital. So we have to have risk management in place. So if it checks off that list, then we get order execution. So once we've found something that meets all the rules technically, and it meets our risk management rules, well, then we can simply plug in the way to trade it into our brokerage system and walk away. And I'm going to share with you my brokerage, my portfolio here today, and show you how I've got all my orders set up at the moment, to show you that basically 90% of the money I make in the market, I'm never in front of the computer while it's being made. And I think that's very important if we're going to implement what I think trading is all about, which is money working for us, not you working for your money. That's a job. Investing is about money working for you. So whether you're trading $1 million or $10,000, you should be able to do that with a small amount of allocated time each night where you're implementing a strategy that manages your money for you during the day, and you can just check in on it every night, just like a business owner does with his business. They can check in each day because they have proper management. So without that, it's all emotional. It's all you know, staring at the screen, revenge trading, you know, feeling like you just can't be wrong, so you every time the stock keeps dropping, you buy more. You know you've broken the rules, so you sell at the worst time when it's already dropped so far, and then after you sell at the worst time, you watch it rally back up, and you think, oh, I'm constantly on the wrong side of the trade, because it's all emotional. It lacks strategy. And I'll share with you today a bad trade that I did, just to show you how I allowed my emotions to affect me today. But that's where most people go wrong. When we look at how are you being efficient, you know, which category do you think you fit into? How much money, how much time are you spending trying to make your money in the market? Are you spending 6 hours a day staring at the screen to make 10% a month, or 30 to 40 minutes a day making 6 to 8? Which would you prefer to be spending? Are you perhaps prepared to make 2% less a month to spend 80% less time? I am, but also because I think it's actually the reverse. I think if you start being more efficient, you actually end up making more. And so now I'm going to share with you my bad trade today. So this is a company which we're going to be talking about in a little bit for different reasons, but this is a company which we've been trading quite a lot, Atara Biotherapeutics. And it's had a beautiful run-up. This is something that we found back at $22 back in February, and rode it up to 40. We bought back in at, I think it was 38, and sold it at 48 recently. And bought it again today. So basically what I had done is been analyzing this possible flag formation, and looked at the chart, and last night pre-programmed that if it broke this resistance line, buy it, and then based on a resistance, based on seeing where resistance was, I'd pre-programmed to sell it just above $59. So it was a nice little trade from 56 up to 59. So $3, which is what, about 5%. I'll take 5% in a day, any day. Now all of that I programmed into my brokerage account last night at about 1 o'clock in the morning, and so by the time I'd gotten around to checking my portfolio today, it had already exited, and I'd already made a really decent chunk on the stock. So a lot of the other trades we've done had all done really, really well as well, and so then I had an hour spare, and I thought, okay, well, let's have a look at possibly a re-entry to this, because this thing's got a really big surge behind it. Carlos Slim, who probably many of you know as being one of the richest Mexican gentlemen in North America, one of the richest North Americans in general. He's a big backer of this. He's got a lot of interesting stuff going on fundamentally. So I thought, yeah, great. Let's look for a re-entry. And so I sat there watching the screen. Waiting for a support level to be hit. And so I probably sat there and what I would call wasted 2 hours as it never caught support. Now, as a technical analyst, looking at this now in retrospect, that should have been obvious, because there really was no interesting support until it got down to 52. And that's where it finally bounced. Now, the point of this, me sharing this story, is that the day trading is exciting, but is it efficient? Because a lot of the best trades I find that I do that even turn out to be even an hour-long trades are things that you can pre-program the night before with this set and forget mentality. If you know where these strategies and rules come into play and how to find them easily. So let's crack into that. All right, so there we go. All right, so firstly we have to ask, what is the strategy? What is your strategy that you're following? And what would the perfect conditions be if you were to find that perfect chart? How would you confirm it? We need to know what our shopping list is and what we're looking for to be able to even start to scan. Most people don't. They're letting any idea come at them and analyzing it one by one with different rules every single time. No wonder you're not consistent if you don't have strict rules and parameters that you analyze the stock each time by. And of course, if you trade options, then you add the option leg onto that movement. And so a lack of consistent rules, no doubt, brings inconsistent results. So the rules that we want to start applying is firstly to look at who controls the market, and simply put, volume controls the market. So the obvious question to ask is, what controls the volume? These days, 80% plus maybe of volume comes from the smart money or high frequency trading. I was living in Mexico for the last 3 months, and one of the gentlemen I met in Playa del Carmen is one of these people that is responsible for this. And he represents a firm that's widespread throughout North America, which is a high-frequency trading wireless network, and their firm represents 10% of the volume in all of the US markets and 5% of the Canadian markets. So in other words, 1 out of 10 stock that is bought every day comes from their firm alone. That's how big this stuff is. And they don't care about the company's management. It's all about rules. So the next obvious question is, what rules do they follow? Well, the basics of the market is, firstly, we've got 3 directions: up, down, and sideways. Simple enough. So we need to take into account that to maximize our potential in the market, we need to be able to make money in all three, or we're inhibiting ourselves. The next type of thing we need to acknowledge is that there's three types of market cycles, or what I call personality types. So we've got oscillation. Now this is where a stock will bounce back and forth between two extremes, basically a floor and a ceiling, and that's when it's going to reverse. Then we have consolidation, which is also oscillation. Then we have momentum, which is where moving averages are the key thing holding the stock up. So I guess before I go on, when you look at a stock, how do we determine when to get in and get out? As a technical analyst, what makes us buy or sell? Any guesses from the audience? What is the number one thing that matters when we buy a stock or short a stock? What are we looking for? Support. Thank you. Support and resistance. And when you talk about high frequency trading, that's all they're looking for. All the rest of the stuff is extra. What matters most is, are you buying at support or resistance? And then the next question is, how strong is that support and resistance? Now, this is very important to understand, therefore, the personalities of the market. Because if you're in an oscillating stock, moving averages don't matter at all. Because an oscillating stock doesn't listen to moving averages. It listens to the support and resistance that's defined by straight, either horizontal or diagonal lines. That's what matters. If you're in a momentum trade, they don't. They're going to inhibit it, or maybe cause some resistance along the way. But the definition of a momentum stock is that it has momentum, which will allow it to crash through or break out of those horizontal resistance levels as it approaches each time. So fundamentally, very, very different. An oscillating stock, you short at resistance. A momentum stock, you go long. Completely different. So they may as well be as different as a long is to a short, because you approach them that differently. So our first job, when we look at the market of any type, whether you're dealing with Forex, whether you're dealing with stocks, and of course if you're dealing with options, you are dealing with stocks, is to build a kind of a fundamental approach to how every chart needs to be interpreted. And what we need to say is that basically there's a rule set that we look at where every stock or index is going to change because of one of three things: horizontal support and resistance, trend line resistance, or moving averages. So your first, in my opinion, most important job before you look at any indicators, before you look at anything at all, is to determine what personality the stock is following. Okay? Because once we know the system of control, once we know the personality, then we know the pattern. Once we know the pattern, then we know the probability of that pattern and whether we want to trade it or not at all. And if it is something that's a high probability pattern, then there's very clearly defined ways to trade it. Where to set your entry, where to set your stop, how much it should be allowed to go the wrong way before you know it's failed, and how much it's going to drop by until that trade is over and you take your profit. These are things that technical analysts have spent decades or centuries in combined research figuring out. And that research is available. You know where to look. So this is the most important thing that we need to do. And then once we've figured out what the pattern is in the system of control, then we figure out where the smart money is going. And that really kind of puts the cream on the pie, so to speak. That then tells us, okay, is the big money buying with this and supporting the trade, or is it selling against it and we possibly have a fake out? Okay, is everyone with me so far? Because now we're going to break over to the live charts and start applying some of this to today's current markets. Yep, everyone's good? Okay. So, one of the really valuable things I want to share with you today is smart money. I talk about this in every presentation because it's one of the most important things I look at. Once you've defined the system of control, we also want to know where smart money is going. Now, on the bottom of the screen, we have an indicator called Twigs Money Flow. It's very, very efficient at summarizing where big money is flowing or market sentiment is flowing, because it encompasses several things. It encompasses what stochastics look at. It encompasses what directional movement looks at. It encompasses what on-balance volume looks at. In other words, it encompasses all the key things that a trader wants to know. Is a stock making new highs? Is it gaining volume as price rises? And is it closing at the top half of the range? Some of the most core fundamental things that define an uptrend, that if they are all there and present, it means the smart money is buying and is sticking. That's the kind of uptrend you want to buy, or a downtrend you want to short with that logic reversed. So very simply put, this indicator, if below zero, shows you that money is flowing out. Above zero, it's flowing in. So two things we can look for is, one, where money flow is above zero and going up, but also when we get divergence. And by divergence, I mean when we first, for example, found this stock, back when I had mentioned to you around 2022, you'll notice that the stock had been going down in price, but money flowing sharply up. So these are the key things that we want to try and locate, is when we have a high probability or profitable pattern where money flow is showing us an inefficiency in the market, or in other words, something is going on behind the scenes that could be a very attractive trade. So, so we've talked about the smart money, and we've talked about support and resistance in terms of three different types: trend lines, horizontals, and moving averages. There is one more type of support and resistance I want to share with you, and it's something called open range. Now, this is a time-based support and resistance. Has anyone here not heard of open range before? It's probably one of the most valuable things that I was taught once. Okay, so open range, we talk about, having rule-based decisions. If you're a futures trader, this is especially valuable. Ever wondered, when you look at the market, wondering which way the index is going to go? Here's a fantastic way to use rules to determine that. Okay, so firstly, let's get all these moving averages off. Now, why am I removing all the moving averages? Because the market is oscillating, so they don't matter. All right, so open range is a technique that shows you where the market makers are pushing their liquidity. Now, open range are 2 days of the month that set key turning points. The first trading day of the month and options expiration, 2 days. So how do you use it? Basically, what you do is the very first trading day of the month, the market's going to set a range. So let's go back here. Let's go back to March. All right, so the first trading day of March, March 2nd, Monday, March 2nd, the market set a range between here and here. Now, That now is a determined range, which we call open range. What we're interested in next is where does the market go from there? Not just where it trades, but where does it close? So the next day, it closed within the range, okay? Don't know yet where it's going. Day after that, closed below the range. Instantly, there's a strong bias. The market is now going to continue down. And you can see it went straight down from there. Our next open range day, of course, is options expiration, which was March 20th. So we find that on the chart. There we go. March 20th is that blue candle. So there's a new open range. We delete the previous one. And again, we're looking at whether it closes above or below. Next day, closes below, down we go. And stays negative below that open range. Then April 1st, new open range. April 1st is here. Okay. Close above the range 2 days later. Bang. Positive. The only month in the last 10, 12 months that this hasn't worked very effectively was May. But right now, we're right on track with another open range that we're going to be hitting tomorrow, being Friday options expiration. So often you've thought about whether you're holding stocks as you hit resistance and being concerned. Now you can start thinking about the probability of holding stocks into time-based resistance, knowing that tomorrow could be a key day where a very new level of resistance or support could be set, depending on whether we close higher or lower than that next week. So now we understand the mechanisms of support and resistance. Now we can start making rule-based decisions. So when we go into for example, looking at the current market conditions, we look at for those of you who follow us on YouTube, we talked about this on where were we? We would June 2nd. On June 2nd, we talked about where's the S&P going to go. Okay, well, let's use our rules. Where is support? Where is resistance? Well, our support is here on the S&P 500. If we look at the short term, you can see we had equal bottoms and declining tops. So we've defined that we're oscillating. We've defined that we are that the support is horizontal, but the trend line is diagonal. What pattern is that? Any guesses? Descending triangle. Therefore, now we know the pattern. Now we know how to trade it. So we measure the peak to the bottom. Okay, so we have a descending triangle. We duplicate that. That tells us that we're going to be dropping, if we break out from 2100, down to 2070. Okay, so there's a 30-point drop on the S&P 500 that was fairly easy to predict. Where was the smart money going? Did it support that? Yes. Look at the trend of the smart money this entire time. As price has gone up, the smart money has continued to make lower lows and lower highs right into that peak. So smart money was going out as the market went up. Not a good sign. So again, another reason why. So the measurement matched up, the trend line matched up, and then if you go and throw your moving average on, that's exactly where the moving average was as well. So you've got all of this perfect storm of support showing you where the market's going. Okay. So what does that mean? Well, that means that you can start looking, because we're still dealing in this kind of sharp and short-ranged oscillation. It means you stop trading the market. It means you stop worrying about stocks that look like the market. It means so things like Apple and things like IBM and so forth. Stop trading things that look exactly like the market, because that's not where the opportunity is. Where the opportunity has been in these last few weeks, despite the market significantly breaking down, has been in the Russell 2000. Despite the S&P, Russell 2000 has been fantastic. A lot of these small to mid-cap stocks have been amazing. And these are the stocks that we've been trading. And I'm going to share with you the patterns here. So this is a pattern you're going to see time and time again here, which is a momentum-based pattern that I call a fallen angel. It's a strategy we developed, and this is where we get a significant drop, and then we get this nice rounded base, or a ski jump, and we can tell that the system is momentum, because you can see it's not oscillating, it's holding beneath the moving average beautifully, and then as soon as it breaks, off it goes. So this is one we picked as a long here at 12 bucks. Moved up its moving average, didn't break through, perfect movement. Again, you can see as the stock went sideways, smart money was going up, and then bang, 50% rally from an FDA approval that was a surprise a couple of days ago. Let's move on to the next one. These are all things we've been publishing, for those of you who are interested in our YouTube channel. So if you want to go back and see that these are things we've actually called, these are all from our these are all our picks from the last few weeks on youtube.acornwealthcorp.com/YouTube. So you can check it out. It is the real deal. ATRA, this is the one we went long on back here, sold it a little too early, bought back, sold it at 48, and that was the one we were day trading today. Again, the same thing. Money flow accumulation came down, swooped up over the moving averages, rode them the whole way up, came down over the moving averages, swooped up, and in each of these situations you can see this divergence in the money flow. Price going sideways, smart money going up. Is there a way to search for stocks that are new trends or signal setups? Yes. In Twigs, in TOS, what is Twigs money flow? It doesn't come with TOS. We have programmed it in TOS, but it is a custom indicator. But it can be easily programmed into TOS. I'll show you some of these other trades. CCOI. This was our pick on Monday for a long. Again, that same thing, that ski jump, straight down, up. Money flow accumulation, stock going down, money flow going up. Notice that none of these look like the market, and notice that all of these have done significantly well given the pressure down on the S&P 500. Again, CTRL, another one that was that looks like it's going to go further. DSCI, swoop down, up, into resistance. That's a bump and run formation. So you can hopefully see the same pattern again and again, but simply just applying these rules and looking at where is resistance, where is support, what is the pattern, where is the money going. So using this mentality, I can flick through all of our stuff, but I'd like to open up the Q&A to the audience to ask. We've got about 7 minutes here to ask what stocks you're interested in. Faro, here's another one that we picked as a long 2 days ago. So if you want to throw some signals and some questions into the question box, I'd be happy to show you what our strategies dictate. FGen, here's another one where I'm long this one. Bought that this morning. Rallied up, pulled back, beautiful cup and handle. Okay. Questions, ANTM. Okay, so ANTM, what do we see? We see a momentum-based system that's broken down into oscillation. We can see the support here. We can see that we've made lower highs, warning of a descending triangle, or if it's a double top, we've got a lower high which is bearish, which would mean which using a double top formation would bring us down to here, which if we were a descending triangle would be the same measurement anyway. We can verify that by looking at where support is. Does this confirm this argument? Yes. Where's the smart money going? The smart money is going out as price goes sideways. So I would be, if I was anything, I'd be short this down to 150. BBL. BBL, we have a fallen angel. I would assume that this will go up and fill the gap to $44. You've got a nice kind of downward swoop. I'd be looking at this as a rally up to 44.40. Money flow supports it. Stock is sideways. Money flow is higher. This could even recover higher than that. But because it's moving average based, I'd be concerned of this moving average coming in over the top. But that would be a really easy $1.50 snag from where it is currently up to 44. I would think. Baidu. Baidu. I don't think there's a huge upside to this in the sense that it looks exactly like the money flow. You're not seeing the stock going down but money flow shooting up, or the stock going up and the money flow shooting down. It just kind of looks okay. And in these markets, my biggest thing is looking for lots of movement versus the pattern. How do you calculate a new pattern starting the first day of options expirations? Well, you basically set whatever the range is tomorrow. Are we going to close higher or lower than that range? That's all you need to know. Does it close higher or lower than the range of tomorrow? And that is where the probability based on that strategy is dictating the market will continue going until the next until the next open range, which is the 1st of July. I'm going to come back to the questions in a second because I'm going to show you, I'm going to do my little spiel because, and then we'll use up all the rest of our time on looking at as many stocks as we can. A lot of people are asking how to scan for this stuff. That's obviously the big value, is how do you find these things quickly? Every stock that I've shown you so far tonight was found within about 5 to 10 minutes using scans that we use. We use free programs online, so the systems we use don't cost you a cent. But through scanning, we can scan for the highest probability patterns, and we can be efficient in what we're doing versus inefficient. Just to kind of skip through here, the presentation that we are offering at the moment is one of probably the highest value things we've ever offered, and it's been extremely popular and successful. It's the Ultimate Trader's Toolbox. We talked about the 5 steps to every trade and having simplicity, strategy, and scans. This is exactly what you get out of this toolbox. It's not expensive. It's about 10 hours of training. And none of it's theory and boring, like it's actionable stuff. And we are not really about theory. We're about what can you take away now and use tomorrow immediately. So it's only $97 for the entire 10 hours. It covers the full presentation about the smart money, Dow theory, and how algorithmic trading and higher frequency trading works, and how to overcome a cycle of loss. We go through basically, how high frequency trading trades. It's some really interesting stuff in there that I mean, I've been doing this for 13, 14 years. Stuff I've only even realized in the last year or two that just blows your mind. Part of the problem with learning to trade is you don't know what you don't know. So you only know it once somebody tells you. So the idea of this course is to cut through all that stuff and get you down to what will make you money. The DNA and blueprint of the market, where we go into fake outs, the power of divergence, very, very interesting, and much more powerful than some people realize. the high probability patterns so that we're not focusing on the stuff we should ignore. Again, it's not about whether it will make us money or not. It's about whether it's the best thing that can make us money or not. And how does, and then this is the final module that ties all of that together, which is once we know exactly what we're looking for, how do we find it? And this is where we will teach you some really awesome scans. Now, not just how to scan for stuff for free that we're looking for, but we'll also teach you how to build your own scans in these programs and the proper process to follow. It's very, very comprehensive. Like by the end of it, even by halfway through it, most people feel like they've gotten way beyond the value of what they paid. So, and that is our commitment to you. If you get through this and find that it was worthless, then we'll refund it back to you. We're not interested in, obviously, taking your money and not delivering value. So that is our guarantee. Once you've gone through that information, you'll actually then have a chance to come to some of our live panels where we, every Tuesday, Thursday, for an hour to an hour and a half, we review every stock that people ask about, where we're predicting the S&P to go next, and actually publish the trades that we're going to be doing the next day. And this is basically what a portfolio following our strategy should look like. This is just a snapshot of all the pending trades I have on my account. Some of them have triggered. The ones that have buy and sell haven't. But I'm short TRQ. I'm long CTRL. You know, you can see FGen I mentioned to you earlier. Long that already. Short BAS. You can see that all of these trades are all pre-programmed with entries, exits, and stops. And some of these I programmed in weeks ago because it's about where is the perfect place to buy based on the chart. And then once I've programmed that trade into my brokerage, I've set it, now I forget it. And on any given day, I could probably not tell you what even half of the stocks I were in were, because once the strategy's in place, you don't need to worry about it, in my opinion. You let the strategy do its job, and you either make money or you don't. So that's how you can get involved. Part of this process is we do actually allow you to have a one-on-one support. You can call in whenever you want it. And last but not least, we also include a trial of our executive summaries. So this will be my last point. Every night you'll get an email from me telling you what I'm buying with my own money tomorrow, what price I'm entering at, what price I'm selling at, and where I'm putting my stop, and the reasons why. So that'll come to a total of 97 US as the package, and because you'll see it's in Canadian dollars. The Trader's Toolbox is about roughly 90 US, and then the $9 add-on brings it to a total of 97 US. So just go to acornwealthcorp.com/day, and that's a wrap.